Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all.
What are these big opportunities that Warren Buffett is talking about? And what does he mean when he says it's important to start small? Imagine you never had to worry about money again. Imagine you could build real wealth by doing almost nothing, so you would never need to work another day in your life. There's a simple way to achieve this, and Warren Buffett has used it in his own life. If you want to know how to do it too, keep watching this video because this is where it begins. Dividend investing is a popular way to make passive income. People like it for a few reasons. First, you don't need a lot of money to start. You can begin with just a little. Second, it can make you wealthy over time. Warren Buffett owns several stocks through his company, Berkshire Hathaway, that pay dividends. Here's what he has to say about it.
Well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock.
Warren Buffett himself says he believes in dividends, and you should too. But how do you start? Imagine you want to make about $50,000 a year, which is around $4,166 a month. I'm going to show you how to do that. First, you need to know there are two kinds of income, active income and passive income. Active income is the money you earn by working hard at your job. Passive income is the money you make from investments, where your money works for you. The trick is to use some of your active income to create passive income. Take a small part of your paycheck every 2 weeks and invest it in dividend-paying stocks. Some of you might be thinking about real estate. Real estate can also give you good passive income and can increase in value, but it usually requires a lot of money to start. With dividend-paying stocks, you can start with as little as $100 or even less. For those interested in real estate, I will cover some options later in the video, so keep watching.
But with public companies, a lot of people do buy stocks to obtain dividends, and they hope for regularity, and there's a signaling aspect to it and everything.
As Buffett says, we buy dividend stocks to get regular cash flow. Let's see how much money you need to cover most of your living costs. We will use Coca-Cola as an example. Warren Buffett likes this company a lot and owns many shares in it. Coca-Cola is a well-known and stable company with a lot of extra money. A company like Coca-Cola can do 3 things with extra money. Save it for emergencies, invest it back into the company, or give it to shareholders as dividends. Because Coca-Cola is so successful, it's best for them to give the money to shareholders. Here's what Warren Buffett says about this strategy for another company he owns.
See's Candy has paid everything virtually out to us that they've earned because they do not have the ability within See's Candy to use large sums which they earn.
You heard it right. Sometimes, the best thing a company can do with its profits is to give them to the shareholders. Coca-Cola, for example, has been paying dividends for a long time. Right now, it has a dividend yield of 3.05% per year. Dividends are usually paid 4 times a year, which is nice. So, how much money can you make with 1 share of Coca-Cola? If you have 1 share, you will get $1.84 in a year. That's not much. But if you have 10 shares, you would get $18.40 a year. And with 1,000 shares, you would get $1,840 a year. To make $4,166 a month, you would need to invest about $1.395 million. You might think it's hard to get to that amount, but I will show you an easy way to get there later in the video. Owning stock has big benefits. A good company like Coca-Cola grows in value over time, so your investment grows too. For example, Coca-Cola's dividend was 28 cents per share in 2013, and now it's 46 cents. Also, the share price has gone up 60% since 2013. Here's a quote from Warren Buffett on investing. If you want to get rich in the stock market, then you need to find stocks with good growth potential and safe, growing dividends, and buy them at good prices. It's simple. Let's look at some other stocks Warren Buffett owns. Citigroup Bank has a dividend rate of 3.58%. To make $50,000 a year from Citigroup, you would need about $975,000 invested. Another company, Vitesse Energy, has a dividend yield of 8.46%. To make $50,000 a year from Vitesse, you would need $650,000 invested. You might think it's best to find the highest-paying dividend stocks, But that's not always the best choice. You want to get the most value for your money, but you have to do it right.
The test about whether to pay dividends is whether you can continue to create more than $1 of value for every dollar you retain.
When you see a company offering very high dividends, it might seem like a great opportunity to make a lot of money. However, these high dividends often mean that the company is not doing well financially. Many times, these companies are close to going bankrupt. Before we go further, if you are interested in earning from YouTube without showing your face or without making videos by yourself using artificial intelligence, like the video that you are watching right now, then I have a special free training for you. Check the first link in the description below to get instant access. Imagine you invest your money in a company that gives you a 10% dividend. At first, you are very happy because you are getting large payments. But later, the company could go bankrupt because of poor financial decisions. Even though this isn't your fault, you would still lose all your money. The lesson here is that high dividends can be a warning sign. They often hide problems within the company. Remember this quote from Warren Buffett: "Time is the friend of the wonderful company, the enemy of the mediocre." This means that good companies get better over time, while average companies struggle. If you don't want to invest in stocks because it's too much work, there is another option for you. You can invest in exchange-traded funds. ETF are groups of stocks sold together. There are many different ETF, but let's talk about two of them. One ETF is called Vanguard International High Dividend Yield Index Fund ETF, or VYMI. It mainly has stocks from companies that give high dividends, which means they pay you money regularly. Right now, VYMI gives a 4.78% dividend yield. To earn $50,000 a year, you would need to invest $975,000. Another ETF is called Invesco S&P Small Cap High Dividend Low Volatility ETF, or XSHD. It gives a 7.98% dividend yield. To make $50,000 a year, you would need to invest $735,000. ETF are easier to manage than individual stocks, but you should still look up the companies in the ETF with a quick Google search to see what they are about. There's another option if you are interested in real estate. You can invest in REITs, which stands for Real Estate Investment Trusts. REITs are like stocks, but they only invest in real estate. They are required by law to give 90% of their profits to investors, so they pay high dividends. One good REIT is Global X Super Dividend ETF, or SRET, which gives a 8.5% dividend yield. To make $50,000 a year, you would need to invest $420,000. You're probably wondering how you can grow your money to $500,000 or more, right? Let me show you how. Let's use Coca-Cola as an example. Right now, Coca-Cola has a dividend yield of 3.05%. To make $50,000 a year from dividends, you would need to invest about $1.295 million. But you don't need to have that much money right now. That's not how dividend investing works. Dividend investing is like running a marathon. You need to keep putting money into buying dividend-paying stocks over time. For example, if you buy 10 shares of Coca-Cola every month, after 10 years, you would have an annual dividend income of $3,000. If you increase your monthly purchase to 20 shares, your annual dividend income would be $6,000. But there's another way to grow your money even faster with the help of compounding interest. This means reinvesting the dividends you earn back into buying more shares. This is called a dividend reinvestment plan. Let's say you buy 20 shares of Coca-Cola each month for 10 years and reinvest your dividends. By doing this, you could make an extra $1,000 a month from your dividends without doing any extra work. Plus, the value of your shares will keep growing over time, helping you build a nest egg that could be worth close to $500,000. Dividends are payments you get from owning stocks. They count as income, which means you have to pay taxes on them. If you decide to use your dividends to buy more stocks, that's great. Just remember this when it's time to do your taxes. If you want to live off the money you make from dividends, follow these steps. 1. Choose what to invest in. Decide if you want to put your money into stocks, ETF, or REITs. 3. Reinvest your dividends. Use the money you earn from dividends to buy more stocks. This helps your money grow faster. 4. Pay taxes on dividends. Don't forget, you have to pay taxes on the money you make from dividends. It might take some time to see big results, but if you keep at it, you will eventually make a lot of money from your dividends and be able to live the life you want. If you enjoy this video, then I think you will enjoy this one as well. Thanks for watching.